Hello traders, today is the 21st of March 2013 and the time in London is 11 minutes past 12 p.m. In New York 11 minutes past 8 a.m. Happy day trading to you all. The title of this video is how to day trade using the Elliott wave principle. At the end of this video, one will be able to understand a day trading strategy, how to day trade, using the Elliott wave strategies. And before we continue, I would like to say to traders that this video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. Especially if you are a new trader, do not use this video to go and trade. All right, it's for educational purposes only. Very important. Let's get started. So we're talking about the wave principle. Very often what is taking place when traders are applying one trading method, they will forget the other trading method. They will apply one trading rule and they will break another trading rule. But to avoid breaking one rule when one is applying another rule is to use the market principles. This principle, which I like to call the market stable data, does not change. All right. Three things the price is doing all the time: either the price in a rising channel, declining channel, and horizontal. That's universal. Whether you are applying Fibonacci, Elliott wave, or any mambo jumbo trading method. All right. This is to laugh a bit. All right. These things stay in place. So looking on my this is the pound dollar currency pair. I'm going to go now to the 3-minute chart, my favorite time frame when I start trading fast. All right, that's where I was stuck. I never look on another time frame. From my 3-minute chart, I see something very interesting here. On my chart, you can see that because when you're going to start counting wave, you want to look on your left hand side. That's our guidelines. Always look on your left hand side. What has happened before? If you draw in your channels, you will see what's happened before. I was in this bearish channel, and what it did, it came out. We don't rush, all right? It came out. You see, it came out like this. I don't chase it. I wait for the first higher low. Language of the price. Price in a downtrend. My display lower lows and lower high until the price failed to display a new what? Lower low. As soon as when it failed to display first new lower low, we don't worry. We say to the price, give us the first higher low. Here it is. That's why I put my green spot line. And I put also the pink line here. I have a reason why I do that. And you can see, as soon as I see now, I will say this is the first Elliott wave. During that time, I don't know what the price will do next, whether the cycle will continue, the Elliott wave cycle will continue or not. I'll just label it, We are labeling. So this is the first Elliott wave. Maybe it may change, the music may change. Next minute, everything is kaput, all right? And we start afresh again, all right? We know that. So we're just going step by step. So I label this one as a first Elliott wave. By the way, if you are more experienced trader, you may perfectly disagree because counting wave, we always disagree with each other. The most important thing is to get the direction right. Is it going up? Good. Have you made money? Good. That's the key point. It's not about blah, 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 blah. This is wrong, this is right. Have you made money? Have you made a right decision? Did you know that the price is going up? All right. If you know the price is going up, that's good. All right. These are the most important things when we are counting wave, the direction. So now I will label this one the first wave. All right. So price pulling back, I will say to myself, second wave must not cancel completely, which means 100%. Shouldn't be 100% retracement of my first wave. So it was a bit messy. You see, you roll it down here. So I will say this is the second wave. Then it went up again here and then pull back a bit here. Now this is what I got. So back. You see, when you roll it down here, also you say, oh, that's the second wave. And you will say this is the third wave beginning here. You just take it step by step. And you start drawing lines, drawing lines, draw channels, and you will see it. For instance, here, one can agree that the price was in a declining channel, yes or no? The channel will point the direction. Just do it like a chart that the price went up from here to here. Yeah, like my chart can do that. Okay, it went up from here to here, and then it went up to here to here. And if you say to the chart that it didn't go up here, the chart will tell you no, it went up. All right, the children will say to you, it went up, and then it went down. It went up. Do exactly like a chart, and then step back. Okay, and see what the price show you. That's why I trade it. All right. So we know that it went down all the way here. So I'm labeling this channel the second wave. We know that 5 wave, all right, on a minor degree can be just one single wave on a higher degree. So the first wave, for instance, on the hourly chart can be divided into 5 sub-waves or minor waves on a 5-minute chart or even on a 3-minute chart, all right? These are the fractal patterns of the wave principle. If you start using the Elliott wave, just, try to say to yourself, I don't want to do it like the old-fashioned way. I want to just develop my own, okay, Elliott wave style, but the guidelines remain intact. We are applying a theory. The guidelines are in place, but develop also your own trading style, okay? That's what we are doing here. So second wave, I would say this is the second wave. I'm watching, I'm just taking it step by step. Then the price went a bit funny. You have to understand that, okay? By the way, you have to understand what is going through the mind of, okay, traders, okay? And the opening time of the market is right here for London. See here? In fact, that's not the point that London did open, because now it's a 4 hours difference between, because the software uses United States time. Okay. Now, by the way, let's continue with our Elliott wave. This is another matter. Opening bell. Day trader must respect the opening bell. So then the price went above like this. Well, we'll be wondering what sort of a third Elliott wave this. All right. And then it pulled back again. And then we say, oh, it's going to be the third wave. Came all the way here and then pulled back and then went down like this and then went down like this. And then we'll be wondering, is it third wave, fourth wave, fifth wave? Well, no, it's not. It's not. Okay, you see? Because if you count this like a third wave, and you count this as the fourth wave, you see, what kind of third wave? Should be the longest wave, shouldn't be the shortest wave, and also should not be cancelled by the third wave. So this is not the third wave, and it's something else. All right? You see now? So, what the price has done, in fact, the price went down like this, you see, and then went up like this, and then went back again here. This is a B, C. Then we have another green line here, you see, this green one going up above the previous one. This one we call X. It's a double zigzag, all right? It's a complex Elliott wave correction here. Our second wave is from here down to this level. All right, you see now? And then it went up again. And then obviously, this is A, B, C. All right? Then we have X. Then we have again A, B, C. It's a double zigzag. Feel free to disagree with me or to bang the table, all right? But I will say to you, this is my count, okay? So now we see it right here. Price was in a declining channel. Went up, display the first high low, first wave, 1, 2, 3. X, 1, 2, 3. It's a double zigzag. It's a bit difficult for new traders. If you want to know more, go to www.24elliottwaves.com. All right. Of course, on YouTube, you can see plenty of video, and also on Google. I don't mind. All right, traders, feel free. So this is what we see. So we see it going up like this. But you can see that, and then this one went down. We say second wave, and then we see a bit of mess. This is not the third wave. We can discount it straight away. That is not the third wave because this one has cancelled it completely. And then we see that in fact it's A, B, C. It's a zigzag. Then we have X, and then the price corrected again. You see this, and then we're getting A, B, C. So in fact, our second wave is from here all the way here. Our second Elliott wave is a double zigzag. A, B, C, X, A, B, C. Now, if it's too complicated for you, think of it. The second wave and the fourth wave in the uptrend are corrective wave. What the price has done in this session, the price pulled back, and then it was consolidation. Here is still correction. All right. So think of it. The second wave is a correction. So there was again correction here. You see, we can draw a line here. It's a consolidation. So the first wave is intact. This one corrected it, followed by a correction. All this is a correction. All right. This is why you have to understand. The second wave is a correction of the first wave. All right. But there's this X here that pushed a bit up, because you have to understand what's going through the mind of traders here. Why the price went up here? They were expecting the third wave here. All right. So some traders say 1, 2, 3. They say this is the second wave ended. They were thinking to push it straight away up, but the price did not go. You understand? The price did not go. It stops for various reasons. All right. This is why we have complex wave, because of either economy news or either reaction in the market. A wave can be stopped, forming a complex Elliott wave. Human beings change their mind. They were thinking to do something, and then they didn't do it. And then we start again. All right. That's why sometimes wave can be cancelled or distorted. So we know now this is the end of our second wave, a bit complex. All right. Apology to new traders, but still with that, don't go away. So now we stay here. All right. It's a complex double zigzag ended here. All right. So if you notice that, you say, okay, give us now the third wave. Here it is. Boom, 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 boom. See how strong it was? That's why I highlighted with the turquoise line here. Tall, the longest wave. You see the bullish. Yeah, you want to see tall candle like this in the third wave. That's normal. It's not distorted, this candle. All right? It's not distorted. You see, that's why the price couldn't cancel it completely. You see, if it was a distorted tall candle, you would have brought it all the way to the base of this candle. It didn't. All right, that's how you know. It's a third Elliott wave. Yes, usually the computers want to reach the target. High frequency trading. Yeah, this machine in the market. That's why you see. Pooh. All right. Our fourth wave is very tiny one. Can you see on your chart? This is the blue one here. Can you see? In this session here. Can you see here? And then the fifth wave, the black one over here. Can you see on your chart? What's happening now, ladies and gentlemen? So if I start afresh again, I'm going to put lines here because I don't want the video to be too long. Okay. All right. Short video. That's why you 2-1. All right. All right. Okay. Now, well, let's see. Yeah. So we say our motive wave has ended it. So we know that the Elliott wave cycle is formed of what? Okay. The motive wave and a corrective wave. All right. So the cycle, motive wave, 1, 2, 3, 4, 5, ABC, or flat correction, or blah, blah, blah. But you have to understand that one cycle can be a mini cycle of another cycle. So even on a monthly chart, we may see 1, 2, 3, 4, 5, ABC. We say one cycle is completed. But that cycle can be only first wave and second wave on another bigger cycle. You see, it's never ending. So we need to when we are dealing with cycle, this is what a lot of traders get into trouble with. When they are dealing with cycle, they say end of the cycle. End of a cycle. End of a cycle. Not end of the cycle. End of a cycle. So because what I've done here, if you go to another time frame, this may be the movement from this green spot to this green spot, maybe just one wave. All right? Because a wave on a higher time frame can be divided into 5 sub-waves on a minor degree. So this is, you see, so when we see end of a cycle, understand that end of a cycle, not the cycle. A bigger cycle is always rolling. That's why I say sometimes they get confused. You see, the price going down, but the price will go up first. People think it's going up. Suppose that we have a bigger cycle on the monthly chart, it's a downtrend, but you may see maybe in 14 days, market going up, everybody says bullish. I told you, George, you are completely wrong. I told you. And then the next day, price return back again, and the down move continues. You are in a down channels. You can only go as far to the upper edge of the declining tunnel, all right? Declining tunnel, All right, in Europe here we have a lot of tunnel also. You see, so think of it as a tunnel, channel, tunnel. All right, okay. So we know now this is the end of our fifth wave. So what's going on now? Okay, it's becoming very interesting, especially for experienced traders. We have now what we call a flat correction taking place. I want to go fast. In fact, I've already labeled it into red. This is the A. If you want to know more about the flat correction, or the psychology of the flat correction, or the formation of the flat correction, go to www.youtube.com/24 Elliott waves. All right, don't miss it. All right, don't miss it. So I'm not going to spend more time again explaining to traders what is a flat correction, what the flat correction is formed. I'll send traders directly to the YouTube channel 24 Elliott waves. All right, that's what I'll do. All right, or you go to www.24elliottwaves.com. I'll prefer to go to www.youtube.com/24 Elliott wave, where I spend most of my time posting video explaining to traders how the flat correction form, different type of flat correction, what trader must look for, practical, talking about day trading. So now you see it, all right? So we have the A corrective move, which can be divided into 5 subwave, all right? It's correcting, okay, the bigger cycle that we have seen from the green spot, yeah, green spot here to this green spot. The ABC is correcting that wave, but this is, okay, it can be divided into 5 waves. Sometimes you can see in 3 waves, all right? But it's a correction, all right? Then we see it, the B corrective wave from here to here. We have exceeded, all right, the high of the motive wave. Because it has exceeded the high of the motive wave, we will be thinking of what? An expanded flat correction or a running flat correction. So if there are some words here you do not understand, you know that you have to go to www.youtube.com/24 Elliott wave to learn, to master once and for all the flat correction. So important. The B corrective wave in expanded or a running correction has a high chart, the B corrective wave, which is here, which has been divided into ABC. A, B, C. You want me to do it for you? I'll do it for you. It's free, all right? Right here. You may say to me, George, I love you. You are the man. It's nothing to do with me, all right? You can do exactly the same thing, all right? You can learn it and do it yourself, all right? So here we are. So, okay, use pink, all right? That's a B corrective wave. As you can see here, has been divided into a 3 wave. This is normal. And in the case of the running and the expanded correction, and very often you will see it will go to the 138%. Can you see the 138 on your screen? 138 extension of the A corrective wave. This is the A corrective wave. That's why I don't want to talk too long to give again another explanation of the flat correction. I'm referring further back to our YouTube channel 24 Elliott waves. See here? The B in the expanded flat correction, and also in the running flat correction has a high chance to go to the one, to traders, to the 138%. Okay, extension zone. Look, traders. Look, the market is drawing all this. Look at that on the dot, 138% on the dot. And they sold it straight away. Yeah, I bet they will sell. I will sell too. So they are selling now because this is A, this is B. So now they want the C corrective wave. They are watching it, and the Elliott wave day traders are very smart, and they will be watching it carefully, and they will be very happy to see 5 waves down. The C corrective wave, okay, which we'll expect something like this. If it couldn't go below the low of the A corrective wave, that will be, all right, a flat correction. But, hey, ladies and gentlemen, pay attention. But, if it goes below the low of the A corrective wave, that will be what? An expanded flat correction. I love an expanded flat correction. Boom, 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 boom. Sometimes, you will not even stop here. You will bring it, all right? You will bring it all the way down. But today, okay, let me see something, all right? Today, I have a feeling. Don't bet on my feeling, all right? Because a lot of new traders sometimes they go and trade because of a video. Don't do that, all right? Don't do that. So I would prefer it to stop here to be a running flat correction, or maybe to dip below it just a bit, only to come back up, all right? So we are expecting a C correction being formed here. And this is what's happened. A lot of stochastic traders will lose money here because they don't know what professionals are thinking to do here. And stochastic is already oversold. You can see traders are buying here. Oversold, CCI oversold, RSI oversold. People are start buying. I mean, this is not buy time now. Okay, you need to wait. Wait patiently. Okay, don't chase it. Just be patient. So we are expecting the C corrective wave, which should be divided into 5 ways. Sometimes you just go straight down. All right. See, it's coming down, baby. So we will prefer it to come in this zone. Let's say this zone, all right? In this zone, all right? But don't be surprised if we bring it down more, because if we stop, if it couldn't go below the low of the A, that's a running correction, running flat correction. If it goes below it, all right, that will be, okay, an expanded flat correction. But again, as I explained to you, the wave pattern is fractal pattern. We are talking about how to day trade, okay, using the wave principle. As you can see, we are going to the wave principle. The B corrective wave has been divided into ABC and went to the 138 Fibonacci extension of the A corrective wave. From this green spot to this green spot here, that's one wave which has been divided into 5 sub-waves. I want to show you something else. Pay attention. I'm going now to the 15-minute chart. Look carefully. Before I go to the 15-minute chart, I want you to see something very interesting here. You see how the price, the X, went up very fast here, and then sharp correction here. The X, you remember, A, B, C, X, A, B, C, double zigzag. Watch this zone. When we go to the 15-minute chart, you'll see that in fact the price went flat. It went up and quickly come back. Remember what I just said now, okay? Going back again to the 15-minute chart. Okay, now I'm going to the 50-minute chart. You see, 50-minute chart, the price came out of this channel. Okay, and now you see this is my green spot. Okay, and you see the other one is right here on the 50-minute chart. You see where I have my X. Now, can you see the body of the candle? It went flat, yes or no? It went flat, all right? It went flat. You can see now on this chart, it was a consolidation here. That's what we are talking about. It's a correction, all right? It's a consolidation. But on the 3-minute chart, we can zoom into this 50-minute chart and see the internal waves that are taking place in this session. It's what we call, that's what I like to say, looking inside the price. These candles here, on the 3-minute chart, we were looking inside these candles. That's the best way to trade, all right? Instead of looking at the price, one can use the wave principle like an eagle to look inside the price. All right? Looking inside the price. Now, so we know that from here to here, all right, where my cursor is, we can't find wave. Now we have a flat correction taking place, and we'll see whether the market will allow it to happen or to be fulfilled completely nicely. I like that. In an efficient market, the market will fulfill the pattern nicely, and then we know that we can buy again and we can make money. All right, this is what I call efficient market. Okay, guys, what's happening here? Now we see it now. Okay, we can't find wave. We know that a flat correction is taking place. The market can change the dynamics. Economy new can change the dynamics of this pattern, which means economy new come out. You see a tall candle suddenly here, boom. You say, oh, George, I told you, this mambo-jumbo of Elliott wave. But the economy news, okay, the fundamentals, the market leaders can change the dynamics of a technical setup. We know that. But if you are a new trader, you think that this is a science, that is always like this, and the price will definitely, okay, form the pattern. But it's not like that. Be flexible, adapt to the current market environment. If the music has changed, what do? The steps must change. All right? All right? You want to know, you don't want to be dancing reggae all the time to the tune of every minute, every music. All right? Okay. To keep long story short, ladies and gentlemen, what is taking place here? I will explain it to you. This is the pound dollar here, the pound US dollar, the pound dollar currency pair. You see that the price was went down in this session, follow my cursor, and then consolidation, and then went down again. This is what we call A. This is A. It's a chart pattern I'm talking about now. I'm not talking about Elliott wave anymore. This point is called A. This point we'll call it B. Okay. And this point we'll call it, okay, well, which one? This one. No, this point we'll call it C. Okay. In fact, if you like, we do it like this. A, B, C, D chart pattern. Okay. It's a chart pattern. This is nothing to do with Elliott wave. Okay. That's it. So we have something like this, and all right, price went down, price went up, price pulled back again. This is the ABCD chart pattern. Price has completed the ABCD chart pattern right here. Traders acknowledge that they knew that. They knew. So they bought it. Price ran fast. This is a distortion. How do I know now? You see, after the distortion, the price will give, usually you see 3 small candles on top of it. Pay attention carefully. Yeah, this candle here is a distortion. You have to be able to know distortion. And then you see small 3 candles. Usually you see that. It's typical small candle. Now, when you see a distorted candle, you highlight the high of the body. You see the body of this candle? You highlight the high. You draw a line there. You also draw a line at the low of the body of that candle. And you draw the median line of that candle. You see the median line where I put it here? You see? That's where the price changes direction here. Here. That's the median of this body. I don't want to draw again. I'll draw one line here. I will draw one line here, and I'll draw one line in the middle. I'm watching it because I know it's a distortion, all right? Because it's not happening in the third Elliott wave. We see sometimes a tall candle like this in the third Elliott wave, and this is not the third Elliott wave. It's a kind of distortion. Doesn't mean that the price will definitely cancel it, but we will draw our lines because we see something, price going vertical. Okay. You see, as the price starts rolling it down, the first target is the median line of the distorted candle. Okay, we talk about this many times, okay? All right, we talk about this many times. All right, so, but you have to notice that the tail of this candle, the price went all the way to the lowest point. In fact, it has cancelled the distortion. You see? You see? You see the tail of this candle? Can you see on your chart? Am I talking to myself? You see? Price went down. First, it stopped here because trader acknowledged the median line. You see, but price after the second candle opened, price went down all the way to cancel it because it's a distortion. They cancel it, confirming to us that this truly this candle is a distorted candle, and the market corrected it very fast. Now a new move has started here. Price quickly close back. You see, push because they cancel. They say no, this is a distorted. They correct it and bring it back to the right point. I'm going to move this spotlight and put it here. Pay attention to what I'm going to say now, okay? Those who understand clearly, okay, the pivot line, the midpoint between the central pivots, okay, the midpoint or the median between the central pivot, which is this dotted, okay, orange line. Can you see on your chart? This is the central pivot line. And, okay, the S1, that's what we call the M2. I don't want the video to be too long, but it has been a bit of time now since I've been talking here. And I'm going to call out the midpoint between the central pivot and the S1, which is the M2, right here. All right? I'm going to go again and show you another line. Between the resistance, I'm going to switch time frame so you can see all the pivot level. I'm looking, well, okay. Hold on a second. Hold on, please. Yeah, now you can see the midpoint between the resistance level 1, which is we call R1, and the resistance level 2, which we call R2. How do we call that? That's what we call what? M4, the midpoint between these two, okay, pivot level. That's what we call M4. I will call it also in turquoise. Very often, the price will move from M2 in the zone of M2, and we go all the way to M4. there is a high chance today that the pound dollar currency pair, today is what? 21st of March, yeah? 21st of March 2013. The time now is 12:41. I've been talking to you now for a long time. Apologies to traders. That was not my intention. All right. So 12:41 now in London. That's correct. So there's a high chance today that this pound dollar currency pair, after completing the flat correction, all right, has a high chance to go all the way to retest this line here. In the zone of 15229. The price now at 15183. It still need to go down a bit more to complete the flat correction. Once the flat correction is completed, we'll wait patiently for New York to open. All right. As soon as New York is open, we'll be watching them because the professional will quickly detect that the price must go back to this level, which is 152. Okay, call it 15230. Okay, 15230. All right, let's call it 15230. So we are waiting for the flat correction to complete, and then we will expect in normal condition. You don't have to bet on it, guys. It's an expectation. It's an expectation, all right? If it's taking place, we'll take advantage of it. If it's not taking place, it's not taking place. We can't force it. All right? It's not a science that we're going to say, John, you said this, it must be like that, always like this. It was like this yesterday, must be the same thing today. No, be flexible. Just keep eyes on the price, what's happening, okay? And follow it. If you are wrong, don't let the ego stop you, all right? Just keep eyes on it, control it, manage it, okay? So there's a high chance because the price very often will move from M2, will move up from M2 to M4. Sometimes the price will move down from M3 to M1, all right? Okay? So, I'm moving on. This is nothing to do with pivot line. It's about Elliott wave and day trading, how we day trade using the wave principle. So, I don't want to dwell on the pivot line. If you are TSCW24 trader, and these information are already at www.best-trading-strategy.com. Okay, so talking about our wave count, what's happening now? We counted 5 waves, and now we are expecting a flat correction to be completed nicely here for us. And we are waiting patiently for the pound dollar currency pair. Though we are using a currency pair, this is valid for stock, for commodity, for futures, for option, whatever you are trading. We are okay, still okay. See, it's rolling it down nicely, isn't it? Beautiful. I would prefer it to go into this session. That would be better. Then if you go back, why am I saying that? Then that would be better signal because if I break below a key level and then return back above it, it become bullish. I would prefer that. Okay, the bear are satisfied, and then they bring it back, waiting for New York to open. Opening bear. So now, we see it now, okay? We count 5 waves and we are expecting. But one thing I need to say to traders, this flat correction that is being formed here, A, B, C, being formed here, is just another corrective wave on a higher degree. Because this flat correction, in fact, I can tell you now, is a 4th wave of a bigger cycle. Because the bigger cycle, if you go to the 50-minute chart, or in fact, I can show you here. You see on the 3-minute chart here, I told you the midpoint, which is the M2 here. In fact, we have a bigger cycle. That's why I said to you, when you say a cycle has finished, it's a cycle, not the cycle. So there is another cycle here. The first wave is this one here, the blue one. First wave from here to here. The second wave, you see the first wave has started from the mid to M2, yes or no? Can you see? And then the second wave, which has started, in fact, which day? Yesterday, on the 20th, all right? There are more stories I can say about this, but I want to keep the video short, so I keep my mouth shut. Okay? Then we have the second wave. Can you see now? Okay? In fact, we can see the second wave to the green line here because, yeah, you agree, all right? The second wave, this is another first wave, second wave. The third wave is from here all the way up here. That third wave has been divided into what? 5 sub-waves. All right, color in pink again to please the lady. So you can see now that what we were doing this morning, first wave, okay, A, B, C, X, A, B, C, third wave, fourth wave, fifth wave, all these 5 waves that we have counted now is just one single wave, which it is represented by this okay, pink line here, from this green spot to this green spot, has been divided into 5 waves. But the bigger cycle is this from here, first wave, second wave. The second wave should not cancel the first wave, as you can see, didn't cancel it. Now the third wave has started from here all the way up here. What's happening now, ladies and gentlemen? We are now in a fourth wave, which is also a complex fourth wave. It is a flat correction, A, B. The B has been divided into A, B, C. All right, you see it now on a live chart, okay? And we expect it to roll. It's rolling in nicely. I like this when I'm doing a live trading for traders and it's showing it like this. Then traders, especially new traders. I remember the first time I was a new trader and I watched some video traders were trading and on a live chart. I was amazed. It's normal, okay? But then the reality is set in, all right? But always, it's important for new traders to see this, okay? It's good. Make you feel good, all right? But don't use demo account. Manage the risk. Don't give all your money away and then you don't have any money to trade with. All right? Don't do that. Don't do like me, okay? Don't do like me, all right? Be smarter. Okay. So now you see, so this flat correction we were talking about is the fourth wave of the bigger size. So I can do like this, okay, down to this level or to this level. If you stop here, we will see where it's going to stop. We don't know yet, but we know that it should be 5 waves down, okay, because it's a C corrective wave for the flat correction. As I explained to you, this is a technical analysis. The economy news, the fundamental, the market leaders can change all this mumbo jumbo of Elliott wave, as my colleague fundamental traders will call it, and say, all this mumbo jumbo, okay? So, but you see, I'm talking like this to make it a bit of fun, so, all right? So we have, you see, we have a bigger cycle, okay? First wave from the M2, all right? Second wave down to this level. Third wave to this level. And a fourth wave probably to this level. Or they may stop before that. But I would prefer it because you can see a lot of greedy traders. They will try to come up quickly, but we'll see until New York open whether they will bring it here or not. Now, by the way, so this is the fourth wave being formed now. It's a flat correction, and we're still waiting for a fifth wave, which will bring it to the M4, the greediest target. Sometime it may not happen in one day, all right? It may drag on like this because maybe there's some economy new. People will forget the pattern completely, and they will even ignore it. Few days later, leave the line on your chart. Few days later, you will see. Suppose there was some crazy news right now regarding the pound, and the pound went down big time. Don't remove this line. If you want to remove them, note down this level. Few days later, the small money does not forget. They will bring it back exactly on the dot, 15230. All right, 15230. All right. So the fourth wave is still underway. We are waiting for the fifth wave. You have to understand that the 5 subwave that we have counted here is just the bigger third wave right here. This is about how to day trade using, okay, the Elliott wave pattern in a real time. All right. I hope you have enjoyed this video, okay, that you have learned something from it, okay. That's the most important because it's an educational video, all right, that you will, okay, put into use, okay, to make better day trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.